Hello everyone, this is Jay from FX OX. So welcome to this video. This is an intro video on FX OX, as well as a tutorial on our products, mainly the FX OX indicator that I would like to share more details with you today. First things first, FX OX was FXOX was founded by Alan Tussell. He's a professional trader with nearly 18 years of experience in the trading environment. He's by profession he's a programmer, he's a coder, and all his work, mainly the last four and a half years, has been in assessing the market movers. That has been his main focus. That is the big institutions and the banks. And all his indicators and expert advisors are programmed based on the market movers trend and how they do trade in the markets. Of course, there are a number of technical indicators as well as fundamental analysis coded into his indicators and EAs. There are a number of algorithms that are run backed by neural networks, and obviously some other stuff that I would talk about in a bit. It's purely based on algorithms, it's algorithmic trading, and I will share more details with you later in this video. Firstly, let's talk about FXOX. As you see, the first thing that the website starts with that unfortunately there's a lot of big scammers in the internet world. Unfortunately, there are a lot of people down there who do sell a lot of things like this, saying a lot of stuff, promising a lot of stuff, and people like you and me, we do get deceived by these guys. So FXOX is not a scam. We don't believe in the scamming crap. And whatever indicators, EAs, and products that we do sell here are backed by certain logic, so which I will also explain to you later in this video when we move to the MT4 platform and I do give you a quick intro on the indicator. I'll show you that it's backed up with some logic, and when you're about to open trades, take trades using our products or indicators or ES, indicators mainly in this video, you would be more comfortable and confident that the trade you're about to take is actually backed by certain logic. So we'll talk about that. Of course, this FXOX is just not a one-man show. It's a full-fledged institute that does a number of stuff. You can go into our services section to learn more. I can very quickly navigate, but the products that Alan develops are highly accurate. It's purely based on institutions' movement in the markets. They can be used in various different instruments, Forex, stocks, binary, cryptos, and of course we do have a mobile support. There is a support available around the clock in case you do have any questions. And the biggest plus of Alan's coding is that in his particular indicators and EAs, he takes care of all kinds of traders. So as you know, some traders do prefer a short-term trading. For example, they would like to go into the market and either do a swing trade or do a scalp and then come out of it as quickly as possible. So our indicator, the FXOX indicator that I would talk about, I would demonstrate that to you, has three distinct trading styles built into one indicator. So there's a short-term trading style, there's a medium, and there is a long-term trading style, all built into this one indicator. Very quickly, on a high level again, the FXOX indicator is this. It has three different trading styles. I talked about that. It gives 100% non-repainting arrow signals. These are absolutely non-repainting, non-disappearing, non-repainting, and non-backpainting. Yeah. So this is for sure. I can promise you for that. It is backed by market movers trend. It takes care of a number of factors in the market like momentum, volume, It also has a number of other integrated technical analysis, including about oversold conditions. It also looks at fundamental analysis, which is run at our backend servers that do receive valid input from various sources in the market. Sorry about that. All that inputs received at our backend servers on fundamentals, that is news that are about to come out, are then run into our servers, combined with other technical analysis and indicators, integrated together then to form a signal. So as you may know, that particularly on fundamentals, nobody knows the outcome of what's going to come out as a news. So that piece of information is something that cannot be 100% reliable unless it is also backed by pure technical analysis. Yeah, if combined together, can really give meaningful results. And this has been brilliant work of Alan that he has been doing in the last many years. Just a moment. Sorry, I just had to. Okay, sorry about that. And it also has a trader assistant, which is a very important tool, part of the indicator. The trader assistant offers you the possibility of analyzing the market in the form of a picture. So you don't need to do your own technical analysis yourself. It clearly signifies to you by a look where the market is headed. It shows you multiple things. For example, it shows you clear breakouts on key levels of support or resistance. It gives you depiction on the direction of the trend, whether it's an uptrend or downtrend. What is the market about to do based on different breakouts? So as and when you do receive this non-repainting OXE arrow signal, which is your entry signal, you just don't blindly take that signal unless it's backed by certain logic, which the trader assistant gives you, or let's say offers you. There are two rules of the trader assistant that I will talk about shortly that you must follow along with the signal, the non-repainting signal, to ensure that your trade does go into good profits. Yeah. Of course, you could blindly take the non-repaint arrow signals as well, which would also give you profits. But if you really target good profits, reliable profits, sustainable profits, then if you follow these two rules, this is for sure. We also have the OXE EA, which is a highly sophisticated EA developed by Alan. It has a huge focus on risk management. So Alan's belief has always been that the only way you can make money in the markets if you know how to reduce your losses and if you know how to protect your risks. So there are two ways to look at the markets, or let's say the way traders think. So either you completely focus on making money and forget about your risks, or there is another way where you don't keep making money as your first priority, rather make protecting your risks as your first priority. So Alan believes in the second. So he believes that over many years, the more traders focus on only making money, eventually lead them into a trap where they actually end up into huge losses. However, traders who do believe in protecting their risks and reducing their losses do end up accumulating money in their accounts. And this is on the basis of what the EA has been coded. So it's purely based on risk management. And as you see here, one of the features is dynamic TP and stop loss. So the EA, based on different market conditions and factors, and based on the algorithms that are coded in, dynamically it continues to adjust your take profit during a live trade. So your profit TP continues to adjust itself automatically by the EA. Include your stop loss does the same. It has multiple features like trailing stops. It closes trades based on fundamental impacts of the market. So based on the algorithms and the signals coming out of our servers, these are invisible signals, won't come onto the charts, but the ES would or the EA would automatically close your trade in case it believes that something weird is coming up. So I don't want to talk too much about the EA in this particular video. I would have a separate video done on that. But again, that also has non-repainting arrows. It has these 3 trading styles, and of course backed by the trader assistant, highly essential. You can navigate through the website. You can go and look at our services. We do a lot of stuff into algorithms, trading algorithms, trade innovation. So we have a lot of work that is currently being done into predictive analysis, predictive signals. There's a trade and innovation lab that we are currently building, where we actually work on innovation algorithms, mainly of how we could follow the markets in the most reliable way and take sustainable, profitable trades. Very soon, this is WIP. Very soon, we would be launching on a weekly basis live trades, that we would actually do live trading, and members can subscribe to us and actually be a part of these live trades. They could open trades with us, but this is coming pretty soon. If you do need more information on the OXE indicator that I will explain now, along with the EA, then you do have places here where you could go and click on and then check for more details. Of course, if you do want to buy or rent out this indicator, there's also an option for rental. Alan believes into rentals. He doesn't believe in scams to rip you off in a one-off cost in the beginning and then you regret later. He does give you the opportunity to test it out and then buy it if you do feel comfortable. So you can go there into the shop section and get some more details on these products. And there's an FAQ and an account section and an affiliate section that you could also go and navigate. Let's now directly move to our MT4 platform. So once you load the indicator onto the chart, it's pretty simple. There would be an installation video and an installation guide. It's as simple, the installation, as installing any other indicator. But there would be an installation guide or a video also posted on the website where you could follow and install the indicator. But if you do so, this is how your chart would look like. Pretty simple, clear, and crisp. You don't see too much of stuff around. This is pretty straight and crisp. So what do you see here? We are in a Euro USD pair right now. I wanted to open the Euro USD later, but because I wanted to tell you something else, but let's do that later. Let's open another pair, Euro JPY or Euro AUD, a pair which is, I want to take a pair which is not so common. So let's say I would take because I want to, okay, let's take a Euro CAD. Yeah, so pairs that are not extremely common. So I just want to show you the accuracy of the signals. So first things first, let me quickly explain to you the chart first. So as you see, you have these blue dots and the red dots here. The blue dots or the blue dot lines are your immediate levels of support. Red lines are your immediate levels of resistance. Then you have this yellow line, which is our trade assistant line. So this is our trade assistant. I will talk about that in a bit. This is our trade assistant line. This is not a moving average, for sure not. This is it's also not an angular momentum, but something of that sort. Not available elsewhere on the internet anywhere. This is directly quoted by Alan. And then you have these yellow arrows. So these yellow arrows are only depicting the direction of the swing or the trend. They are not doing anything else. They are not your entry signals. Then you do have these blue these blue aqua arrows. These blue aqua arrows are actually your entry signals. Yeah, these are our non-repainting arrow signals that will never repaint. Yeah, let me make it a big bit. Yeah, okay, so now you see, to explain the whole picture, we have our trader assistant yellow line, we have blue lines which are your key immediate levels of support, and we have the red lines which are key immediate levels of resistance. And then we have our aqua colored arrows which are your entry arrows, where you would actually think about taking a trade. Why I say think about? Because it needs to be backed up by the trade assistant, which I will talk about. But first, to give you a glimpse of these signals, you look at the accuracy of these signals. We are in an uptrend. The yellow arrow signals gives you or signifies the direction of the swing or the trend. There is a certain potential that the yellow arrows may repaint. That's the only thing in this. But we are not taking any trades on this. We are only taking trades on the aqua arrows. Yeah. I just want to quickly go through, very quickly move around to show you the accuracy of these signals. Yeah, look at this. So just look at these signals here, for example, or these signals here, just amazing. Look at the number of pips you would get with these signals. Yeah, look at this. These are just amazing, very good signals. Sorry. So let me take another pair. Now let's go to Euro USD because I wanted to also explain to you something else here. So also on the Euro USD, let's have a quick look. You got multiple signals here. Market is really headed upwards, and then okay, then you got a signal here, you have a signal here, you have a signal here, number of signals here. Look at the accuracy of these signals, and just see how steep the market bends down or move upwards when these signals come in. Just look at this. I have really zoomed this in, so if I make it bigger, these are really huge pips, guys, and we are on a 1 hourly chart. I'm using the midterm trading methodology between 1 hour to 4 hours. Look at this. Look at this signal here. Look how the market goes down. So just amazing. Look at this. Okay, so that was very quickly to move around and just show you the chart, and also show you the crisp look and feel of the indicator. Let me now very quickly explain the trader assistant and how, in what cases would you want to take the trades. So as Alan says, that the aqua arrow signals are really reliable signals, and you could even blindly take them. However, if you, because the market has a tendency to deceive you and deceive all its traders, you would have heard about false breakouts and so on and so forth. So therefore, Alan says that if you really want to ensure that your trades that you do take eventually go into good profits, you know, even if you blindly take them, you would go into profit. But if you want to go into good profits and sustainable profits, then follow the 2 trade assistant rules. And what are these rules? So let me explain. As soon as this is a downtrend, as this yellow arrow signifies, and we have a down signal here, which is a non-repainting signal, then we follow the 2 trade assistant rules. What are the 2 trade assistant rules? The first rule is that the signal candle, in case it's a sell signal, then the signal candle must appear below the trade assistant line, which is true. The second rule is that in case of a sell trade, then the second rule is that either this particular candle, which is the sell candle, would have broken an immediate support level. Yeah. In this case, there is no immediate support here, or it should show you at least a recent rejection of the resistance. So what happens here? There is no immediate support here, but you do see that there was a support here which was broken, and then you also see loads of resistance over here. Let's take another example. So therefore this would be a valid trade, and see, boom, how the market goes down. Let's take another example. So okay, let's take this example in an uptrend. So we got a buy signal here, non-repainting. The first rule is that this signal candle must be above the trade assistant line, which is true. And the second rule is that you should see at least a recent break of the resistance. The signal candle must break either a certain level of resistance, or there should be a rejection of a recent support. This is a very good trade example, because this signal candle, you see, it breaks this resistance line, and it also, the same candle also shows you a rejection of the previous support with this wick here. So this is such a perfect signal. I would bet all my money on this. And you see how the market goes up. So Alan says that if you follow the trade assistant rules, you're almost sure, nothing is almost sure, but the probability is extremely high that you won't be deceived by any false breakouts or any major pullbacks, and the market is really headed in that particular direction. And this is exactly what happens here. Let's take another example just to very quickly explain to you. Okay, let's take this example here. Downtrend, arrow signal, non-repainting, good. The first rule is it should be below the trade assistant line. It is below the trade assistant. The second rule is, in case of a downtrend, it should either break the recent support, or there should be a recent rejection of the resistance. So in this case, you see this candle already breaks support, and there is also a recent evident clear rejection of the last resistance. So the market is headed towards the down, and you see there is no pullback. Your stop loss won't be eaten up, it will only go down. In what cases must you not take? You may not take these trades where you may be doubtful. Look, this is another brilliant example, because in this particular down example of this signal, you also have a break of the support, and you also have a recent rejection of the resistance. Brilliant. And see how the market just goes down. There is no pullback, there is no coming back if you follow these rules. Okay, in this example, so this is an example where I would show you in what case you may not necessarily take the trade. So let's take this example. So you have an up signal here, non-repainting. The first rule is that the candle must close above the trade assistant line, which is true. The second rule, in case of an up buy signal, as I explained earlier, that either it should break the recent resistance line, or there should be a rejection from the recent support, or both. So in this example, the first rule is met, that it is closing above the trade assistant line. As for the second rule, it doesn't break the resistance line here. In fact, there is some kind of rejection on the resistance. yeah, which makes me a bit doubtful that why, if I'm headed towards the up, there is some kind of rejection on the resistance. However, there is a previous rejection of the support. You see this wick. So in such a condition, such a scenario, I'm a bit doubtful because I'm stuck in between this level of support and resistance. On one side, I do get a rejection on the support, which means the market doesn't want to go down, rather would potentially go up. This is what I'm aiming. But on the other hand, it didn't even break the resistance. So I'm a bit stuck and doubtful. I won't take this trade personally. Yeah. Whereas in this example, if you see, this is another example. First rule is met, it is above the trade assistance line. As for the second rule, it didn't break the recent resistance. However, there was a recent rejection of the support. So I'm also a bit doubtful here. I won't take this trade. Yeah, personally, I won't take this trade. Yeah, so look at this example. This is a great example again. In this example, if we have a down signal, the candle signal kind of closes below the trade assistant line, which is good. The second rule is that either it should break the recent support. There is no recent support here, yeah, or it should show a rejection of the recent resistance. So you see, you have a clear rejection here of the recent resistance, yeah, and you didn't have any particular support here, yeah, at this level. So you are evident that the market will go down. And to be 100% sure, first of all, you would take this trade here, you would open this trade. But as your trade progresses, with this particular candle breaking this level of support here, you become more than 100% sure that your trade is really going to progress well and really give you good profits. So all I'm trying to tell you is that all these non-repainting aqua signals are tradable. Yeah, they are really good and reliable signals. 95% of the time they will point you towards the bottom or up without any major pullbacks or retracements. But could be 5% of the time, as the example I showed you here, this one, where you might see a certain level of pullback. But overall, the signal is so reliable that it will eventually head you in the direction you are aiming for. But if you do follow the trade assistant rules that I just explained to you, you will get rid of these deceptions from the market and rather move straight on in the direction you're headed without coming back at all. So guys, that's all that I wanted to explain on the trade assistant. Quickly on trade closing, where do you actually take your TPs? So there are two options to close your trades. The first option is, to give you an example, in this one, you would either close your trade on the next yellow arrow signal, or as soon as the candle crosses in the other direction of the trade assistant line. So if you're on a downtrend, you would actually close your trade on this candle. Coincidentally, this is a candle on which the yellow arrow also appears, and this is also the candle which crossed the trade assistant line in the opposite direction. So you would close your trade here. In this particular example, you could close your trade here on this candle, or if you believe that you want to take it to the level of the yellow arrow to progress your trade further, you can also do that. In terms of your stop losses, your stop loss will always be on the previous highest high in case of a down trade, and will always be the previous lower low in case of a up trade. So in this case, your stop loss will be at least 2 to 3 pips below your lowest low, and in this case it will be 2 to 3 pips above your higher high over here. So that's all about it. Now you see how crisp clear this chart is. It doesn't have too complex indicators. It's very easy and clear to read it and understand it. What Alan says that why these trade signals are so reliable, because they are backed up with the trade assistant, and it's two simple, very simple rules that I just talked about. If you follow them, you do get confidence and the level of comfort that the trades that you're about to take are actually really going to give you profits. It's no BS. It's really based on logic. These key levels of support and resistance are fundamental things in the markets. And if you really use them properly, along with good reliable signals, you are definitely ensuring profits. Another thing about the trade assistant, it gives you it signifies multiple things to you. I can't even talk about them, so many things now in this video, but in such a very easy to understand, clear picture. Another thing, the trade assistant also signifies levels of pullbacks and retracements. So for example, you see, let me give you an example here. So you see the market is headed up and we have an upswing here, and over here this is a pullback, which means it shows you that the market is pulling back. There is a break of this immediate trend here. If you draw a trend line here, you would see that this candle that breaks the trade assistant line means that the trend line was actually broken and there is a pullback here. And this candle over here is another candle which signifies that the market is again headed upwards. So it also clearly shows you, without you having to draw trend lines or draw other lines on support, resistance, trends, it clearly, easily, eloquently shows you where is the market pulling back, where is it retracing, what is it doing, and what is it likely to do. So for example, in this particular case, you know that you're in a downtrend, in a downswing. As soon as this candle crossed the trade assistant line, you clearly already know the market is headed towards the down. Okay guys, that's all about it. In addition, that's all about the indicator and its features, and the trade assistant, and how to open trades, how to take your trades, that I wanted to share with you. However, in addition, the beauty of the trade assistant is that it also it also gives you a number of trading opportunities, areas, points where you can open trades, not directly visible on the chart. However, I can explain to you that with the help of the trade assistant, how you're even able to take those additional trades manually. So if you follow the trade assistant rules for both the buy and the sell that I explained earlier, you can even open a lot of trades manually. Let's take this example. We are in an uptrend. We don't have any particular aqua arrow non-repainting signals here. However, we know that this is a swing towards the up. We know it also from the yellow arrow, and we know it that all these candles are headed or trending above our trade assistant yellow line. So this also clearly shows that the market is trending upwards. So for the buy signals, or for the buy trades, one of the rules of the trade assistant that we had two rules, in fact. We are going to follow the same rules, talking about buy trades first of all. What we are looking at is, for buy trades, we are looking at two things. So firstly, the candles must be above the yellow trade assistant line, which is true in this case. And in the second case, we are looking for areas of rejection of the support, where we see wicks candles where there are rejections on the level of support, or in cases where there are breakouts of the resistance, the red lines. So if I look at this, and if I do want to mark some trades that I would open, let me quickly do that for you first, and then I can explain it to you later. what this means. And I would get a lot of trades like this actually. So in just a span of 6 to 8 hours, I could really open up, take some very good trades. Okay. We also have a trade here. And we also have a trade here. Okay, so very quickly, so here we see we are in an uptrend or an upswing. We see that the market is trending above the trade assistant line. What we are looking at is resistance, either resistance on the level of support. So you see a wick here. This candle clearly shows a resistance. In live trading, you would see a blue dot marked over here in live, in real time, which will signify that there is a rejection here. So ideally speaking, if you have two candles showing rejection on the level of support or resistance, in this case level of support, because we're talking about buy trades, ideally two candles, then it is good, but even one candle can do, because you're in an uptrend and the market is strengthened to move up. So this is a valid trade. There is a rejection on the level of support here. Or the second rule for our buy trades was either a rejection, or it should be even a breakout of the resistance. So you see this one here is a breakout of the resistance, so I would also take a trade here. We have rejection on level of support. We have so I would take a trade here. There is a breakout of this resistance, so I would take a trade here. There is resistance of the support. I would take a trade here. We have two candles here with rejection of the support. I would take a trade here. Breakout of resistance. I would take a trade here. How do you know where do you want to end your close your trades? So you would close your trades, as I mentioned earlier, either with the yellow arrow, or as soon as there is a candle is breaking in the opposite direction of our trend assistant line. Yeah. So this is where you would close your trades. And similarly, another indication is that as soon as the sell signals trade assistant rules you would see evident on the chart, would clearly signify that the market is now moved towards the other direction. So the sell signals rules for trade assistant are, of course, a breakout of either the support, which already happens here after a long uptrend, which signifies the market is going to go down, or if there is rejection on the level of the resistance. So here manually in a downtrend, if I very quickly mark, this is a very good example here. We have an example here, and we have examples here. So you see this is level of resistance. So we had resistance on these candles, we had resistance on these candles. So I could take a trade here, I could take a rejection here. I could take these two trades here because there is rejection from the level of resistance. In a downtrend, you see these long wicks, rejection from the level of resistance means the market is going to go down. And in this particular example, our candles are also below our trade assistant line. In this particular, I did draw the arrow, but actually I wouldn't take this trade here because it's not below our trade assistant line in case of this downtrend. This also I won't take because it's not below our trade assistant line. Why I won't take? Because Alan recommends that. You see, the biggest objective of the market movers is to deceive you so that they can make loads of money. So why Alan doesn't recommend taking these trades? If any of the rules of our trade assistant is not followed, there is a high likelihood that the market might do weird things that you may not like. Therefore, let's always follow these two simple rules, following our magical trade assistant line, and then take these trades, which will definitely clearly simply take you into profits. So guys, that's all about it. You might have observed and understood how easy and crisp it is to read such a chart. No complex indicators, simply support and resistance lines coded by Alan with a trade assistant yellow line, and that's it. I'm going to leave you with that. If you do have any questions, please write on our email support@fxox.com, and one of our agents would be happy to respond back to your queries over email. In case you want to write to me, please also use the same email address and write to me any questions you may have, the attention of Jay, and I would also be happy to respond back. Thank you very much for watching, and have a great rest of the day. Thank you very much.